Rian wanted us to look at Remgro. Rian, we can see that that Remgro is overbought at the moment, which means the probability of profit taking or a pullback is more likely. But hey, it's fighting that red line, that 40-week moving average, and that is waiting at 100 Rand and 75 cents. Above it, the long-term sentiment will change to positive, and below it, we can assume that the momentum and the long-term sentiment will remain negative. We can see the previous time Remgro tried to fight this 40-week moving average was back in November 2019 until February 2020, and it couldn't change and keep it as support. It did for a couple of weeks, but then the selling pressure just took it to lower levels. And previously as well, in February 2019, same story. So if Remgro can change this 40-week moving average into a support and start to consolidate above it, coming from such a low base, that will be seen as very, very positive. We're also sitting here with a beautiful cup and handle formation, which means it's a positive formation, but the resistance that needs to be overcome, or the neckline that represents that cup and handle formation that will confirm the optimism around that formation, is waiting at 105 Rand and 11 cents. Above that level, the formation is in play, and we can assume that the share, should the buyers continue to protect it, can take it to higher levels. What is the full target of my cup and handle? It's the length of the cup projected upwards from the neckline where my handle will be confirmed, and that means a Remgro can possibly go to 127.36. Keep in mind, your stochastic is overbought, which means it won't happen in one line. It might do it in cycles, and that you'll have to wait a little bit longer because the share might, nothing is definite, might first pull back. The optimism around this cup and handle formation, Rian, will be off the table when that low at 91 Rand changes into a resistance. So a critical level that needs to remain a support in order to assume that the momentum to the top can continue. A nice share to keep on your radar or on your hot list should the share pull back, because I think it can be a nice opportunity. I hoped for a window on higher levels on the weekly graph, but I can't see any. Which is always a nice target to aim for when a share comes from such a long base, because sometimes it becomes difficult to decide when to take profit when it just continues to rally like that. But a window is a nice target that you can aim for, knowing that it will reach there, because windows always get closed. Kevin wanted us to look at wisdom tree weed. And this is not the wheat you smoke, it is wheat in bread, like that type of wheat. And wisdom tree weed, WHEAT. There you go. Ticker is listed in Italy on the Milan exchange, and the ticker is WEAT. So Kevin, at the moment we can see that it is in a consolidation phase. Strong resistance there at 64 euro cents. But I also want to draw then here a beautiful inverse head and shoulder formation. That is a possibility. I've got a left shoulder here, and that left shoulder touched the neckline. I've got a beautiful head, and it might be building on a possible right shoulder. If you want to use this part, this loop here, as a right shoulder, I'll have to draw the line down so that the start of my left shoulder touches the line. But then that means my left shoulder doesn't, the right shoulder, that means the left shoulder doesn't touch the line then. So I am going to keep this line, with that incline coming from the low base on the left shoulder, so that I've got a clear left shoulder with two touching points, a beautiful head, and let's see, maybe a pullback, because my stochastic is still sitting on a 71, which means my instrument can pull back a little bit. But let's say it comes back to that 40-week moving average, and that is waiting at 50 euro cents. Maybe then we will find a support again, like it did here in September and the week of the 30th November, and then a bounce again. Above that neckline, the inverse head and shoulder formation will be on the table, and we can assume that this instrument can reach for higher levels. But below the the right part of this or the left, you can use either one, whichever one is the lowest you can use, and that is waiting at 52 euro cents. Below that level, we can assume that the optimism around this possible inverse head and shoulder formation is off the table and that the momentum to the bottom can continue. What is positive about this graph, that every time the share pulls back, the support is a little bit higher, even if I go back to the 29th of April, every time the support is a little bit higher. And that is seen as very, very positive on Wisdom Tree wheat. Humpo wanted us to look at Box Inc. And I can see that many of you, are trying or to consider taking profits because of the US market that rallied so much. And we can see, Humpo, that there is a possible inverse cup and handle formation here on Box Inc. And they do cloud management services, for those of you who don't know what this company does. So we can see there's a beautiful cup and a possible handle formation. Again, my share is fighting that 40-week moving average, that red line, and that is waiting at $18.11 US cents. Below that level, the long-term sentiment will change to negative again, and then we can assume that the share can maybe pull back to that strong support waiting at $15.08. Also take note here, Mpo, every time the share bounces, the high is a little bit lower, a little bit lower, a little bit lower. And that implies loss of momentum. It implies that every time the sellers become stronger in the rallies and that they are taking profit a lot earlier. So if that low of that or that neckline of my inverse cup and handle changes into a resistance at $15.08, we can see the share back at $9.14 should the full formation play out. We can only assume that the negativity or the warning of this formation will be off the table and be wiped off the table when that resistance at $20.18 starts to change into a support again. Because above $20.18, I can assume that the momentum to the top can continue again. If we pull back, we can see, that record high back in June 2018. Every time the share bounced, the highs are a little bit lower, and that is seen as negative for Box Inc. Werner wanted to look at Polar Power, also listed on the NASDAQ. Ticker of the share is POLA. Massive lamp pole formation. In the week of 19th of January, this share rallied 104%. So, at the moment, Werner, I think I hope you've got the share and not trying to buy it at these levels. It is overbought on my stochastic. I've got a divergence, my blue line, that K line, which represents my shorter moving average, have broken downwards, which implies the probability of the instrument to pull back, sellers taking profit, is more likely. I also have a possible shooting star candle here. A shooting star candle is a candle at the top of a rally that's got a long tail at the top, and I can only confirm that being a shooting star carrying candle when the next candle, my next candle, will be a bearish type of candle, and that can be anything, but it needs to be confirmed that this is true, that the sellers are serious, and that they are meaning business, continuing the profit taking. So my confirmation of pessimism will be confirmed when the shares start to consolidate below $20.80, but above $30.82, we can assume again that the momentum to the top can continue on Polar Power and that the buyers will continue to protect the share. Also take note, this was a beautiful example of a Darvas model share. Why? We had a long consolidation phase, but very important, when the shares started to change this 40-week moving average into a support, look at that beautiful technical goodbye kiss, a positive technical goodbye kiss in that week of the 26th of October when the share pulled back, tested that 40-week moving average and bounced from there along with the spike in volume. That meant business and the share just could not, it just almost couldn't help itself, just continued to rise for higher levels. And if I go back, we can see the share was only listed here in December 2016, but a brand new record high for Polar Bear. But you can keep those levels, close by to make sure that you do not miss anything. Equinix, a property company, Ben wanted us to have a look at it. We can see lower highs are visible, Ben, but the share is oversold. And in that week of the 4th of January and the 11th of January, I had 2 consecutive candles with long tails at the bottom, which implied a tweezer bottom. A tweezer bottom is a turnaround pattern that implies that if there's enough buyers, that they can continue to take the share to higher levels. So the critical resistance that needs to change into a port on Equinix is $730.73. Above that level, we can assume that the momentum to the top can continue, and that this might be, a pennant, a bullish pennant formation, and that the momentum to the top will rise again, like it did here back in March 2020. But below these lows, below that support of $663, we can assume then that the momentum to the bottom can escalate again, and that the selling pressure will take this a share lower. It's coming from a top. Although I saw a pullback, we've seen a pullback. Keep an eye on that 40-week moving average. It needs to change and remain a support in order to believe that this instrument can rise for higher levels. And obviously that strong resistance, that ultimate top at $839.77 is a critical level that needs to change into a support in order for us to believe that the momentum to the top can continue for another rally to the upside. Don't forget to send through your questions for next week's show. Have a fantastic week. Take care.